Good afternoon, everyone. This is Henry Gamble with simplertrading.com, and as we come into tonight's free video, lots of volatility, right? Wednesday kind of brought new highs to several new markets, and then Thursday and Friday, the NASDAQ really had some steep selling, pretty significant corrections, and now we're sitting here looking at it thinking, what's next? I want to go into next week a little bit cautious, more like selling begets more selling a lot of times. So I think that break you saw on Thursday and the weakness on Friday, you got to give it some credibility, and there may be a little bit more of that to come through. But I don't think we're going to crash into September 11th. I think it would be something where we get through the 3-day weekend. If Tuesday opens up kind of mild, or it could be down a little bit, but if it can show some signs of stability, you may get an abbreviated week that can show a little bit of strength. Now, if that happens, two Dow components that I've been keeping an eye on, one of which is Goldman Sachs. I want to emphasize that these are not my best picks. It might be a little bit better to just be in cash, but I really love studying these squeeze signals. And when you're looking at this pattern, the idea that this compression, right, it's just trying to find moments in time where you can duplicate a signal. This one was, ultimately resolved higher, a little bit sloppy back in here, sure, but the point that I'm looking at is where those dots transition. What that is showing you is the Bollinger Bands expanding outside of the Keltner channels, and is one way of technically looking at a chart that suggests you may be expanding out of the previous range. So if you can see where that range expansion took place, then we had one of them, kind of right in here, takes you back up into those old highs, and now you have the signal again. So I'll say again that the idea of buying Goldman Sachs to me is kind of like, maybe it's all right, but I've got squeezes, and it showed relative strength while the NASDAQ was just getting taken out and beaten. So, a little bit of relative strength in there, and the same to be said for JP Morgan. So you can see the trend line here. It becomes a little bit more difficult to want to force this trade when you're below the 618. You can see that from the previous major swing high of 141 down into this swing low, the 618 did provide a relevant area of resistance. So, but that's all the way back at 115. And I'm just thinking, does this signal get us up here to clear the highs? And this is where you see a little bit of strength to help keep the market afloat while tech continues to rotate lower. So I hope that is helpful and gives you some good things to think about as you get into your shortened week on Tuesday. Have a great 3-day weekend, and we'll see you at the next free video.